the CFO of Cummins India, joining us live right here. Good morning. So we did see the decline in the bottom line. Various factors were attributed to it, including inflation, just the way prices had also run up. But the commentary is now in the conference call is about a robust demand. How should we see this, the first quarter performance, and going forward, you're talking about robust demand?
Hi, good morning to all of you, and as well as to all the viewers. You talked about the profitability aspect. Just a point of clarification there. Same time last quarter, we had an exceptional income associated with a land sale, and that's the reason we had that one-time gain. And that's the reason when you look at the profit comparison, it gets skewed because of that. But on a apples to apples comparison, when you would look at the results, you would find that our profitability, when you look at the profit before interest and taxes, our margins actually expanded 250 basis points. Of course, same time last year was not a equally comparable quarter because of the wave 2 last year. But overall, I think from a margin point of view, I think clearly on a sequential basis, we did hold our margin at about 16.9%, which was the same margin in previous quarter. Despite the headwinds that we have been experiencing as a consequence of the commodity inflation and the general inflation in the economy.
Forward, because just given your exports position as well, the robust demand that Cummins was talking about in the conference call, can you talk to us a little bit more about that?
Certainly, I think export is something which, over the past 2 to 3 quarters, we have been seeing a fairly steady demand which is holding up. And the reason the export demand continues to be consistent and robust over the previous quarters, including the quarter we just reported, is a function of how we have seen a fairly broad-based demand across all the end markets, whether you look at Asia Pacific or Europe, North America, Latin America, Middle East, Africa. So all across the regions, we did see a fairly steady demand outlook. Primarily, the demand is coming as a function of 2 or 3 factors, I would say. One is these economies, which are, some of them are dependent on the natural resources and commodities. They have seen increase in their economic activity as a result of the commodity inflation. So their economy started to come back. Second thing is the continued focus across with respect to where it comes to healthcare, data center. Those are the end markets which are showing fairly good demand, telecom being one other as well. And the third thing is that somewhere the broader infrastructure spend in some of the economies, especially when you look at Middle East, Africa, that is also driving the private capex. And when you put all these factors together, we have seen the exports doing well. Of course, operationally also we have significant capacity when it comes to meeting the demand because of the on-ground investment in our manufacturing assets, and that did help as the demand started to rise. And that is what we have seen. I think we had about 480 plus crores for a quarter. The analyst and all of you would typically ask us questions few quarters ago as to when are we going to cross 400 crore consistently per quarter on exports revenue. And I think that is where we are for the last 3 quarters plus.
From a market standpoint, there is just one point of contention, that why is that there is a listed company and there is a subsidiary, and what would be the main focus area for Cummins Global?
No, certainly. I think this is a question which we do get often asked, and I think what we have been very consistently saying is that the listed entity and the portfolio of businesses which are in the listed entities continue to grow, continue to get invested with, continue to sort of look at from their product development or technology introduction, while the one which is in unlisted entities are predominantly the newer set of businesses which were never part of the listed entities. So the governance boundaries between listed and unlisted entities are very, very tightly monitored and maintained, which very clearly means that from a listed entity point of view and the products the listed entity has, those products continue to get the access to the technology that is needed in order for the respective portfolios to grow, whether it be in the power gen side or whether it is on the industrial side. And export is another testimony. A significant part of the exports are through listed entities, and the reason is very simple, because those businesses, those products remain as a part of listed entities and continues to be so as we continue to look at both the growth of our listed and unlisted entities.
Ajay, so can I say that the new businesses and the high exciting businesses is something which Indian shareholders will not get a chance to participate in, because there are two changes. There are two things here. One is the cyclical demand, which is fully getting captured in the existing listed company, which is what we are talking about. Then there is a new energy business, the interesting business where the investments are there, but you're sowing right now and you would be reaping after some years. So that new business will not come to the listed entity.
No, I'm not saying that. What I'm saying is that when you look at the portfolio of businesses that we have, and let's talk about the listed entity. The listed entity has businesses which are primarily serving the standby power or a backup power, which is the diesel generating sets. And then we have services and distribution business, and we also have the industrial portfolio. So as the technology evolves, just case in point being the CPCB 4 plus norms will be effective July of 2023. So in order to migrate from the previous emission standard to the new emission standards, the technology that is needed to make that change is definitely available, and our products will be ready to meet those emission standards. Similarly, you talked about some of these new power. That's the name we give for the newer businesses like hydrogen, fuel cells, battery or battery electric. Now, the portfolio of businesses that the listed entity has, if tomorrow the end user or the customers, or there is a demand for those products where these technologies need to be introduced, the listed entity has full access. As an example, tomorrow if there are need for hydrogen as a fuel, and some of the applications like railways or standby power or any industrial application that need or that demand exists in India, the listed entity will have access to that technology to introduce those products for Indian markets. I hope I answered your question.
Thank you very much. So my follow-up question here is, fundamentally there is a change in energy consumption, and it's a very evident pattern. Electricity availability is getting better, discoms are getting healthier. So what happens to the compulsive diesel business, or the compulsive business which was thriving because of lack of power and dependence on alternate sources of generating energy?
No, really good question. I think energy security at a very macro level clearly is going to be a theme that will be very, very important for India. And when you come back to our business, which is for diesel generating sets, certainly the grid power and grid power reliability is improving. The fundamental question that we have to ask is that would the need for standby power be fully eliminated? As an example, can we think about any infrastructure, whether it is a hospital or a port or an airport or a hotel or a commercial building or a residential building? The grid reliability certainly is there, but can we just not plan for a standby power or not? Because the standby power, in our belief, would be needed. The usage of standby power is certainly changing the profile, where the usage of gensets, what it was, let's say 10 years ago to what it is today, those hours they are running are certainly reducing. But would there be a 100% elimination of standby power from any critical infrastructure? We don't see that happening. That is number one. Number two, from a diesel as a technology is also getting better in terms of the newer emission standards that the government is introducing. We have seen what happened with the introduction of BS6 for the on-highway markets. The government did in April 2020. Now, when the CPCB 4 plus norms, which will come middle of next year, they are game changers, because relative to the existing emissions for standby power, the newer emissions are looking for 80 to 90% improvement over the current level for the oxides of nitrogen or for particulate matters. So therefore, I think a combination of efforts that are being taken, be it on the renewable side, be it on the alternate fuel side, be it getting the emissions tighter and tighter, plus the fuel strategy the government keeps talking about. All of these multi-paths are going to lead towards meeting the sustainability goals, is going to go towards meeting the energy demand of the country. And definitely we feel we have a role to play in this particular transition that is happening now.
Okay, Ajay, great to have you on the show. Thank you so much for taking the time out and so candidly and patiently answering all of our questions today.